afternoon, everyone, and welcome to our MSME Masterclass. Introducing our esteemed speaker for today's Masterclass webinar, Mr. Nagarajan P.K, the Director and CEO of Tiger Steel Engineering India Private Limited, is an absolute privilege. Mr. Nagarajan brings over 35 years of unparalleled experience in the Indian steel industry. A highly respected civil engineer and an acknowledged authority in pre-engineered metal buildings and cold-rolled metal sections, he has left an indelible mark on domestic and international markets with innovative solutions for construction projects. Throughout his career, Mr. Nagarajan has passionately advocated for promoting steel usage across India. This commitment is demonstrated through his collaboration with the Indian National Steel Development and Research Association to organize impactful steel usage seminars nationwide. In addition to his vast industry experience, Mr. Nagarajan has garnered international exposure by attending premier global events such as MetalCon USA, bringing valuable insights and innovations to Indian markets. His educational foundation in civil engineering from Andhra University has been the cornerstone of his illustrious career. Today, as a visionary leader in the construction and steel sector, Mr. Nagarajan will share his experience and expertise on tackling the critical challenges MSMEs face, focusing on innovative construction technologies, enhancing steel usage, and leveraging global trends. Please join me in welcoming Mr. Nagarajan P.K, a trailblazer who continues to shape the future of Indian steel and construction industry. Welcome to our MSME Masterclass, sir. We're privileged to have you today.
Good afternoon to all our industry colleagues, and we do hope that we can share our experience to benefit the larger audience that we have in place today. And I look forward to, sharing with you whatever I have gained over the last 35 years for the betterment of the country and its prospects in the world. Thank you.
Thank you, sir. So while the topic for today is addressing the key challenges for MSMEs in the construction sector, we would begin with our first question to you, sir, which is to do with the Amrit Kal period that the Government of India announced. Can you tell our attendees the various incentive schemes were launched during Amrit Kal period, which was like production-linked incentive to boost manufacturing and infrastructure and make India a developed nation by 2047. In your view, how do PEB solutions and construction plans contribute to this vision of the government?
Well, I think it's a great moment in the history for India as it propels to become a developed nation by 2047, a vision set by the Government of India. So when we say developed nation, what we can do is to compare what the developed nations have in terms of steel per capita consumption. So if you take India today, India's per capita consumption is about 97 kgs. And developed nations like China, for example, they're around 646. Of course, the global average is around 212 or so. Now, if you look at a bit of past, in 1995, the per capita consumption of India was 27. So over the last 30 years or so, India has moved from that figure 27 to 97. So between now and 2030, the Government of India has set a target of 160 kg. So which means that we will be accelerating and growing fast. Now, how this could be achieved is in each of the government initiatives, like the PLI scheme for boost in manufacturing, the infrastructure push. Already we have the PMAY, which is the Prime Minister Awas Yojana for the rural housing as well as the urban development. So what happens is when these initiatives are in place, most of these initiatives consume steel for construction. So whether it's a factory building or it's a railway station or a railway metro project, or for that matter, any of the infrastructure, ports, airport development, they consume huge quantity of steel. So the PEB industry is well poised to contribute to providing solutions to each one of those segments. Of course, there are positives about the steel. The positives that you can have a environment sustainable growth. I mean, steel is recyclable material, so using that gives you a sustainability from an environment point of view. Also, it gives you fast track construction. And there are, of course, some concerns. India being a country which has use conventional material. So among the various applications, there are three broader applications. One is, into the buildings, which are normal buildings that you see, residential buildings, commercial buildings. Then you have got in the manufacturing, and then you have got the infrastructure. As far as the manufacturing and infrastructure is concerned, the penetration of PEB has been good, but it's been pretty low in the building segment. So therefore, there is an opportunity to work towards finding out solutions into this segment as well, so that the overall per capita consumption of steel can go up in the country by finding new applications. At the same time, on the existing applications, due to the growth which is going to come by the various initiatives mentioned by Government of India, we see a greater consumption of steel. So overall, I think we are in a good space in terms of the overall infrastructure, in terms of the initiatives, in terms of the demand to contribute to this government vision.
Next question to you is with regards to the key challenges that MSMEs face in the construction sector. Could you tell us what are these key challenges?
MSME operate in pure manufacturing, MSMEs operate in pure services, and MSMEs operate in manufacturing as well as service. So when you take construction, for example, it is a combination of manufacturing and services. Whereas a lot of, like for example, an ancillary to an automobile company is into pure manufacturing. He manufactures and supplies the goods. So an MSME is operating in all the three sectors. So one of the key challenges that the MSME faces in all the three sectors is that they are subject to what is called as a pricing pressure. In terms of getting a job from a large company, they are either going through a tender process or they're going through a process of zero-based costing. So there is a transparency in the costing system that from the raw material to the finished goods as to how the various costs gets added up, and there is a cost added towards the overheads and profits. Now, this being the scenario, in case of any abnormal increase in steel prices, for example, unless and until the steel prices are compensated immediately, this eats into the margins. Now, in my 35 years experience, I have seen that the steel prices do fluctuate from time to time, and people are used to factoring or buffering in their costing some amount of absorption. But if there is a very abnormal kind of a situation where the steel prices go up, in double digits, and that too, in the range of 35-40%, then what happens is that immediate compensation of steel price is one of the big concerns for the industry. So, passing on the steel price to the end consumer is one big challenge which the MSMEs do face. The second issue is the supply chain management. For example, it's easier for the steel companies to say that for every thickness we will supply 20 tons of material. But in the usage point of view, particularly in projects, it may not be that every project uses a thickness of 20 tons. Somewhere it may use even 10 tons or 2 tons or 8 tons. So availability of the material as per the quantity required to complete a project in the set form, that kind of a development is in progress, as I can see. There has been development of steel centers, there has been development of hypermarts. So there has been a lot of efforts made by the steel companies to address this particular concern. But I would say that both in terms of pricing, in terms of availability, this last mile delivery, which you see in e-commerce industry, for example, they moved very quickly. For example, earlier, what used to take, you and me used to wait for a pizza or anything that you order for half an hour, 45 minutes. Now, you have the new generation delivery system which promises to deliver in 10 to 15 minutes. If you want to even buy on Akshay Triti gold, it's delivered in 10 minutes, and it's a wow factor, for example. So just the way in which all of us want to enjoy the wow factor, an MSME also should be able to enjoy this wow factor in their life. Okay, and that's what gives them motivation to grow. So I strongly feel that the improvement and further innovation and development in the supply chain management is one more challenges which MSMEs face. The third, of course, is inequality. For example, the size of an MSME vis-a-vis size of a large company, it does not give them the kind of a bargaining power either way. Either, they're making a product supplying to a large company or they're buying material from a large company. Now, what happens is that the situation as it may be, but unless and until they're able to bargain, to assume that, within a given costing system that they will manage their business and still be able to grow without having financial pressures would be, not conducive for the fast track growth that, we are envisioning in the India. So MSMEs are the backbone of the industry, and therefore these factors, if looked upon in a manner in which, they can take along the MSMEs in the growth, then I think, these challenges over time will get diminished.
Absolutely. So, because you touched upon supply chain in your previous response, I want to check with you on one thing, which is what strategies can be adopted to mitigate the supply chain disruptions which are caused by raw material shortages.
See, I think, given the current situation, it's always better to hold inventory for about 30 to 60 days. So that's one thing which I would suggest. Because it's definitely, even from a steel plant point of view, their production cycles are such that, they would have to, have some kind of a quantum defined for purposeless. The second option is that, there are already existing steel centers, like Steel Authority have got a lot of, steel centers all over the place. Similarly, the other steel companies as well. So, have a relationship with them on an ongoing basis. And third is there is a fairly good network of dealer and trade, which is available in the market. So use them in a judicious manner, given the kind of costing that you have on a particular deal with the end customer. So while costing, you should take into account that you may have to tap into all these three sources, given the nature and variation of materials involved in that particular project. So if a project consumes one thickness, large quantity, then going directly to the mill can solve the problem. But if it is not so, it is going to be over 25 items and each item of different thickness, then one must take into account all these three sources available to do this thing in terms of the costing and not lose money over that. And also be able to supply the goods in time. These are the things that come to my mind today. Of course, last mile delivery is a pleasure. One would see as to how this would come as the demand goes up. I'm sure the system will be worked upon, and we'll be able to benefit from them in time to come.
And so, what, according to you, are the most effective ways to manage working capital amidst rising raw material costs and extended payment cycles?
See, one of the things is that you need to work with your suppliers and say that we need an extended payment time from you, because these are not these don't happen always. These happen sometimes, and we have to learn actually at all levels to deal that sometimes not as a regular method of business. You have to treat that as exception, and in that exceptional period, we all have to rise above the given lines and norms. The same thing applies to the banking who support the industry, particularly when such a situation is faced by the industry. Then the working capital norms also need to be relaxed by the bank so that they can deal with this situation and come out of it and do their business in normal way without being impacted either on the volumes or in terms of meeting the end dates or customer requirements. That's how we can have a pride in ourselves as a nation to have delivered goods in time and of a right quality and at the right time. So all of us need to really join in this journey and support each other, and that's the way this problem can be sorted out. But if you say no, it's not my problem, it's your lookout. And given my experience over the 30 years, I've heard this more often than ever. It does happen. And also, India is a country where we do see that we are, experiencing happiness and success for some period, and a lot of time, we struggle to, meet our objectives. So this ratio of, success to, not being successful that ratio needs to change and needs to go more in favor of success. It can happen if you all join hands together and move in that direction.
Now, so moving on to our next question, which is about how can financial or government institutions provide innovative liquidity solutions tailored for the construction sector?
I think the government of India has the TREDS scheme, which is a bill discounting scheme for the MSMEs. So it's a very unique scheme in the sense you can put in your bills and you can get it discounted immediately. And the agency which does the discounting will get the payment from the end customer on the due date, whatever has been agreed upon. So this facility actually offers to ensure your liquidity is available to do the business. Also, I think failure of companies to actually pay on time or delay the thing. There are provisions in the IT Act, which does not work in favor of these companies to delay the payment either way. So therefore, there is a more support to see that these payments are made on time. So those are the things which are available in the country right now. And besides the other support which is available through the customers, which from case to case can be negotiated at the time of orders.
So let's talk about price fluctuations now. Can you tell our attendees what mechanisms can be adopted to pass on raw material price fluctuations to clients without losing on competitiveness?
See, I think this is a very good question. The nature in which one can predict a price movement through the algorithms is something not available to the industry. I mean, it's not like now that in 6 months' time what the steel price is going to be. We have faced this very frequently in the last about 15 to 20 years that the steel prices have either gone down or rapidly increased. So the two mechanisms which we have practiced is one is to incorporate a price escalation clause in the contracts, and particularly if the contracts are long duration contracts. Okay, for example, if it's a long duration contract, then you can define the base price of steel that's been considered, and then say that if it goes beyond this, then you will be compensated. This is one way of doing it. The second is that in my earlier question I had said that one need to carry 35 to 60 days inventory. So for shorter duration contracts, I think as long as you practice that inventory plus you do a little bit of a material increase factor while pricing, it should see you through short-term contracts. Or rather, you can also say that if you're doing a contract say less than 500 tons, then this mechanism of not having an escalation clause yet going through the contract is workable. But if it's going to be larger quantities and larger time scale, then have an escalation clause. These are the mechanisms which a customer also will be open to accept. And a lot of government contracts, they do specify escalation clause, and they provide escalation on material services. In some of the private corporate sector, I think this is evolving now, and I think more it comes in place, it's better relief for the MSMEs in the sector.
Correct. Sir, according to you, what are the biggest challenges in receiving timely payments, and how can these issues be addressed proactively?
See, I think if you are able to have a payment term that before dispatch of your goods, you can be paid. So this would be the best form of getting the timely payment. But given the nature of relationship that's evolved over the last so many years, there is always different types of payment system which are there, like upon receipt of goods or within a certain number of days after receipt of goods. So in all the scenarios, I think it's very important that the company which is paying the goods, they normally paid on the basis of receiving the goods and acceptance of the goods. So these are the two criteria based on which they pay the money. And then they also have a purchase order, so they would want to be sure that the invoices raised are linked to the purchase order. So all the documentation in terms of the invoicing, having correct particulars of the purchase order number, product description, they are put in a proper format. Also, there are requirements to add quality control certificates or material test certificates, or there may be any other tests that need to be carried out as a part of the certification process. All those documentations, if they are in place, it makes your payment happen in time as per the agreement. So this is what we have experienced.
And according to you, sir, how can technology be leveraged for faster invoice processing and better tracking of payments?
I think manual invoicing is almost out. I think most of the invoicing is done online, so it's either SAP or Tally. So I think India has progressed pretty well on that. We also have these automatic systems at customers' end also. So I think on that front, digital payments are also happening. Online payments are also happening. So I think a lot of progress we have made, particularly in the technology side of the invoicing. Yeah.
Now, sir, my next question to you is about best practices. Could you share with our attendees what are the best practices to secure early or advanced payments without jeopardizing client relationships?
I think one of the things I would identify is that steel-based work is highly steel-intensive. Almost about 70% of the order value is the steel cost. So obviously, when you're negotiating the contract with the customer, you bring to his kind attention that given the kind of execution cycle that is being discussed and the kind of working capital support that is required necessitates a higher advance. So at the negotiation stage, this can be discussed and agreed upon. And I think most of the customers, if they do see that it's an advantage for getting the job done on time, I think this is a win-win situation. So I think you need to ask for higher advance, which helps you to meet this requirement.
Now, Sam, let's move on to retention payments. Can you tell us why do retention payments take so long to realize, and how can this process be expedited while maintaining compliance with contract terms?
See, the purchase order or the work order which is issued is the base document, and it stipulates the work to be done by the vendor, and if you completed the work as per that, and then you got a completion certificate, and if at the time of completion certificate the customers do tend to highlight the snags which are there in the work, and there is a snag list which is prepared, and the snag list is executed and corrected, and then you get a snag list document also verified and vetted by the customer, and then there is a handover certificate, and then you have at least to say that whatever order was given to me, I have completed this, and these are the documentations for that. Then what remains is basically the reconciliation in accounts. Like for example, vis-a-vis the total billing that you have done, what payments are made. There are certain times payments are made based on milestone completions, and at times there are tendencies for customers to hold some money or pending completion of some work. So if you completed your work and your reconciliation has been done, then I think it becomes a reasonable enough for a customer to take note of that and settle this matter. So that is how retention payments can be done. But however, the industry is very progressive. I think if you give them a performance bank guarantee, for whatever performance period is there, they will release the payments immediately to you also. But however, these documentations are a must even in the case of PBC.
Sir, according to you, can you highlight the role contract dispute resolution clauses play in addressing issues like withheld retention payments?
See, I think it's a part of the earlier question. If a retention payment is, for example, not released in spite of all this which has been highlighted, then what happens is the case becomes a fit case for arbitration. So you need to involve the presence of a mediator. Normally, the Indian legal system, provide for mediation between the two parties. And if there are certain, unreconciled issue or non-reconciled issues, those, the mediator facilitates between both the sides to amicably look at it and settle it. So that's how, this contract dispute resolution mechanism works in India. Ideally, you do it on a one-to-one basis, that's the best. But then if you say that I don't want to talk to you, in spite of my showing you all the proof and documentation, then it becomes difficult. So, but I would still suggest that one must, document during the execution period all the key, progress related issues, and then take this forward. That's the way it can be, handled.
Now let's discuss documentation and communication, sir. Can you tell our attendees how can documentation and communication be improved to strengthen the position of payment-related disputes?
Yes, I think that's a very good question. If you take a look at purchase orders which are released by the clients, then you will realize that the work to be done, that is very defined, very clearly defined, that so much of work has to be done. Also, I think other terms and conditions are also defined. But there is a very important document called as, responsibility matrix. That if I have to complete an work, then there is an enabling agency. Like, for example, it could be from the client side, or it could be from a third party who's involved with that particular job. Each of them have a role to play for this work to be completed. It is not that this work can be completed independently by the MSME alone or the supplier alone. So supplier to complete this, there is a need for other agencies to play their role. Like, for example, a customer has to release purchase order on time. He has to release drawings on time. He has to release advances on time. These are the things the customer has to do. Similarly, the consultants or the architects, they have to approve drawings on time. So these are the enabling agencies. So you need to have a responsibility matrix in the purchase order itself, so that, and based on that, one should arrive at the completion schedule, so that at the end of the day, you can clearly, analyze as to why a particular, dispute has arisen and what are the key factors. And if all the agencies understand as to why this happened, then perhaps, there'll be a more broader understanding and resolution of the mechanism.
Got it. So my question to you, next question to you is, according to you, what reforms are needed in labor laws to ease compliance burdens while ensuring fair practices?
I think, a lot of work is being done on the labor reforms in India. We have, the existing norms, which have stipulations on the permanent workmen, to be, part of the role. Ideally, going forward, there need to be relaxation on these norms, so that, the workman availability and its usage can be improved. Secondly, I would say that, we also have, a lot of other, reforms which are underway, and I think, coming from a country like India, a lot of thought and discussion is going on at the highest level. I suppose they would roll out those reforms. But from our point of view, I think, being able to recruit not necessarily permanent workmen on the role, because, the way to adjust the upside and downside of a business, which keep happening from time to time, is that you need to have a certain amount of permanent role and certain amount of a variable role. So I think these kinds of provisions need to come in place, so that, it becomes more transparent and it becomes a workable mechanism.
And so how can labor shortages and high turnover often disrupt construction projects and be better managed?
I think, we have to look at our training institutes, for example, ITI, for example, to churn out, a large quantum of tradesmen, because it's not only in construction but also in manufacturing. So the availability has to go up, so that, this issue can be tackled. And second issues, of course, there is also rising cost of labor, because companies have to comply with, the ESI, PF rules, So these actually add on to make the overall costing for workmen. So it's appropriate to take note of this issue and build that in the overall costing. So that paying a certain fraction of sum towards the labor, it should not be looked at it's a high cost or something. But these provisions have really led to increase in cost, and those have to be factored and need to be provided so that labor will be more attracted to come in large numbers to the force. But if you are paying them less and they are not finding the like livelihood is also being taken care, then only the shortages will come. But if it's like a normal work and there is a fair recognition of the cost and the living, I think that will also be a motivation for the workmen to be available.
And so, what policies or frameworks could be introduced to streamline dispute resolution, especially in contract disagreements?
I think, as I mentioned earlier, we need to, have the first of all an amicable settlement between the 2 or 3 parties or whatever, because that's the best way to solve. I mean, if between the two you cannot solve, the third person has to understand to solve it. So I think it's always better to create that kind of a relationship, right from the start, that you are able to talk to them and address the problem. By not talking and having a one-sided approach, then a third party comes, and then I've already mentioned there is a legal mechanism. Those are painful mechanisms for anybody. Besides time taking, it's a non-productive work. So mediator-driven settlements are accepted very well. And finally, there are courts. I mean, they are there to take a call based on the merits of the issue. So these are the mechanisms which are available at the moment. Yeah.
In continuation to that, sir, how can arbitration or mediation be more accessible and effective for handling contract disputes?
Yeah, arbitration is done with the mediator. It's a court-appointed mediator, or a mediator which is appointed, acceptable to both the parties, or sole arbitration. There should be a clause in the purchase order for arbitration and the place of arbitration. So that as and when that event happens, you can take recourse to the arbitration, and then through a mediator, the reconciliation can be done. Arbitration can be a good mechanism to solve the dispute resolutions in contracts.
So, what key steps can be taken to ensure financial practices are robust enough to withstand liquidity crisis?
I think in my opening comment, I had mentioned that MSMEs are subject to zero-based costing. So what happens is not only MSEs but many of the companies operate based on a certain amount of costing. They have A plus B plus C leading to a certain cost. So what happens is that when anybody starts a business, they start with reasonable amount of capital which is put into the business, and taking into account the business model which prevails in the industry, they set out to journey in executing. Now, during the process of this journey, as they make reasonable profits, it only strengthens their equity structure. So as long as you are in that kind of a zone, then you are having a robust financials in terms of the reserves and capital structure. But however, the pitfall here is that if you do a business where the recoveries are not happening as per your costing structure, it does sometimes be necessary to do certain jobs with that kind of an approach, but it cannot be always, for example, to do like that. So if you do always like that, then your financial robustness will be tested, and it will start getting depleted. So I think you need to consciously increase your reserves or whatever. Do your capital expenditures in such a manner that you don't use all that you have, and then and the business plan doesn't work out, then you are finding difficulties. And third is to follow a business model which recovers your cost. And at least, if you're not able to make profit in bad times, but at least it recovers your cost. But even if the cost doesn't get recovered fully, then it's, and that too continually, then it's a problem. So you have to be watchful of the work you're doing and take jobs with a lot of care and consciousness.
So how can industry associations and trade bodies support lobbying for better payment terms and fair contract practices?
Yeah, I think it is for every company to handle the negotiations and the business on a one-to-one basis with their customers. Okay, associations can really help in providing training and spreading awareness. For example, in our industry, usage of steel in different applications, and what kind of a training we need to provide to our men who do the erection. These are the things the associations can support the industry. And rest of it, there is clear opportunity with the customers. When you negotiate with them, you know that what are the terms and conditions that meet your requirement, and the customer also knows that what kind of a terms and condition is feasible for them. So a meeting of the two results in a business. So this cannot be a part of the association coming together. It will then lead to something like a cartel, which is not a practice which is there. So one has to work within the boundaries of fair mechanisms which are available.
And so how can collaboration with larger construction players help negotiate better contract terms, payment cycles, and raw material price adjustments?
Yeah, I think this is a very good question, and we see in developed countries, like for example, you have large construction companies. They actually buy the PEBs and they service the end customer. So their size related to the size of the end customer is such that it removes all the inequalities which I had earlier mentioned. So there's a lot of equality and sitting down together and negotiating the terms of contract. There's also larger size allows a larger a canvas on which the cost can be absorbed. So if it's only a PEB guy trying to absorb all the costs, it becomes a huge thing. So one is to associate with large construction companies, as is a practice in some of the developed economies, to execute the projects, and take this initiative forward, because the solution in steel is always a function of the kind of application and the kind of demand. So if you do associate with a large company, the benefits are multifold than what if you did on your own. So this is what comes to our mind.
That was my last question to you, sir. Thank you so much for sharing your insights and intel on addressing some of the key challenges that MSMEs face in the construction sector. Your insights, I'm sure, will help the MSMEs do better work in the times to come. Thank you so much, sir.
I wish you all the best at JSW platform to do more such podcasts so that it can benefit the audience at large. Thank you very much for inviting me.
Thank you, sir. For our attendees online, if you wish to see this episode, or if you've missed any part of this current episode, or if you want to see any of our previously recorded MSME Masterclass episodes, you can go on YouTube, type JSW One MSME, and you will find all the episodes uploaded there, including the current one. Thank you once again, sir. Bye-bye.
Bye-bye.